Good morning, everyone. Welcome back to another episode of Lessons Learned, the dumbest thing I've ever done with money. My name is Suzanne, and I am the head coach at Grace Financial Coaching. And I am super excited to have my friend George Curbelo on with us today. George is also a financial coach with a background in the financial and banking industries. He utilizes his coaching and mentoring skills to focus on helping his clients achieve their financial goals. George went through his own debt-free journey about 3 years ago and knows the heartache and despair of such circumstances. Within his coaching practice, George is sure to create a judgment-free zone, which helps couples and families move away from that shame and doubt that so many of us experience and into purpose and direction with their money. George has been married for 22 years, has 2 beautiful daughters, and left New York City for Florida and does not miss the snow. Correct, George?
That is correct. I appreciate that. Thank you, Coach. I have to
Yes.
say it's a good morning, and I have to say if it is cold in your area, I'm sorry because it's not cold here in Tampa, so we're good.
No, it's not. It looks beautiful there.
A little too
Well,
sunny.
George,
I won't rub it in. It's okay.
yeah, don't rub it in too hard. So tell us about your coaching practice and how you help these couples and families.
Absolutely. So thank you for having me on. It's a pleasure being on the show. I really work with couples and clients all together, really about, it's all about money. That's what we're here to really help out. I wish it was easy for a lot of the clients to kind of like, let me Google budget, let me Google this, watch a video, and now we're an expert. A lot of times it's not about the numbers that really hold us back. When it comes to our finances, it's the behaviors and habits that really kind of put us in those situations. We always wonder, well, like I make good money, or why do I spend the way I spend? Or why is it my partner is not on the same page? These are all things that we really work through. So for me, I work with my clients to really understand exactly what is it that's driving them? What is their purpose? What is their why? What are some of their goals? Because that's even some of the questions that come up is, why are you on your financial journey today? And really start to dig deep. Then allowing the numbers to really reflect those values. So that's how I help my clients. It's really providing the education, but also providing the accountability that comes with managing the money.
Yeah, and it can be a big eye opener when we do that first budget.
Yeah.
And whatever we're using, Excel, YNAB, Mint, every dollar, whatever you're using, and those totals roll up and it shows you how much more you're spending than what you're bringing in. Boy, that can be pretty shocking, damaging, scary. I've had some people just shut down.
Yeah.
After that first, usually that's like my meeting and a half where we've gathered numbers and then we're putting it into some format and just completely shut down.
So, and that's, at least they took the step to talk to a coach, right? And talk to someone. We shut down when it comes to our relationships. We shut down with our family members, and we it's like, we'll leave that for another day. And what ends up happening when it comes to our finances and our situations is the other day always comes the next day. And those feelings, those emotions, the things that are putting us in that situation, they're still there. And I think that's what gets a lot of clients really worried and concerned when it comes to their finances. It's, why can't I sleep at night? Why am I working so hard and not seeing any payoff? And I get it. Sometimes we have inflation. We have all of these buzzwords that's out there that we can use as reasons for why it's not working for us. But at the end of the day, I look at it as holding ourselves accountable. What is it that I'm doing each day to achieve those particular goals that I have set for myself when it comes to my money, my wife's money, my spouse's money, my kids, and the things that they're doing? Because you know how it is, right? We're parents. If we're blessed, and I'm just saying, if we're blessed to be parents itself, right? We are our examples to our kids. I could always say, growing up, money was not an easy topic in my household.
Oh yeah.
And I imagine that's a common thing. It's more of a, well, if there's a problem, we're not going to talk about it. If there is no problem, we're still not going to talk about it because we got things to do and go work. So I think those are things that we carry in generation and generation. And I think that's when we come into our financial kind of peace situation, our journey, we want to say, let's be different. Let's change the what's out there about the perception of money, what we do with money, how we do things, and we try to figure out how do we make those changes itself for the better, not only for ourselves but for our family.
I think, unfortunately, the trending thought process is the opposite of what you just said, though. You just said we want to be different with our money. Most of the time, I find people think that everyone else has it all together. And they want to be like everybody else.
Yeah.
What they don't realize is 8 to 9 out of their 10 friends are living paycheck to paycheck, just like they are. So they think it's them. They shut down. There's the stigma attached to money. We don't want to talk about it. We talk about sex, politics, and religion in this country way more than we talk about money, and we need to flip that.
Right.
And it turns into this Instagram view. Everyone else has it all together except me.
Correct.
So we need to teach people and coach people into believing or proving to them the majority of people don't have it together. Even though it looks like everyone else is adulting just fine, the majority of people do not have it together.
And we can get through the day. It doesn't mean that we completely shut down, but we do have to come to realization too that our neighbors really are, maybe some of them are not as well off as we think. We definitely want to portray this image that we've got our stuff together, we have everything taken care of, there are no concerns. But then we get to a realization that everybody is stressed. Everybody is worried. Everybody is in that situation where if like a medical emergency is in place, or the next paycheck doesn't come, we're all, there's people in that same boat where we're in a financial crisis. So I think we need to step ourselves out of that bubble and kind of like, okay, what do I need to do? Let's not worry about everyone else. What do we need to do to make sure we're set right and have the clear goals of what we want to accomplish when it comes to the things that I do with my money? You always hear, be intentional with your money. What does that mean itself? You're going to be the director. You're telling your money what to do. And there's all of these like, oh, you invest and save and pay yourself. And I'm like, look, they're not all wrong, but we have to figure out what is it that you want as an individual, as a family itself, help you get your goals aligned, and align them to what you value, and then have a plan to actually accomplish it. You have to have a setup, and that happens not just with money. You want to be a fitness, get your fitness goals going as well. It's funny how it's all mental. It's how we are putting ourselves in a position to be able to actually get these things accomplished. And we don't realize like, oh, I'll just wing it. We'll figure it out when we get there. And you realize not always going to be a good idea.
No. You reminded me of a client I had years ago, and I still check in with her every few months. When we started, she was paying 10 to 12% on $80,000 in student loans.
Yep.
And she was 22 years old.
Yep.
And we did her budget. And I said, what's this? It was some weird female investing something or other. And we're putting a couple $100 a month in there. And she said, well, my friend told me I needed to start saving for retirement. And I'm like, girl, you got $80,000 in student loans at 10%. We got to get this down to a reasonable number before you're even thinking about it. Because you're 22, not 48 or 68, And so it's a catch-22 because sometimes you get good advice and sometimes you get bad advice from the people who love you.
Right. No, and everybody's an expert, and we get that. I think for me, there's no wrong in investing and having debt or having debt. Like I get that, but what I always say is that you have to pay yourself. That's always, it's all about paying yourself, right? But what does that mean? We talk about the foundations that are needed. Well, you need for me, an emergency fund or having a savings itself is vital to doing anything you want to do with money. because you know what's going to happen. Life is going to happen. Something is going to happen that's going to derail your progress. It is good to have something in place that allows you to not have to worry about, oh my goodness, I have a setback, now I'm done for, or a setback for 5 months or a year because of this. And as a young individual, I get it. We're going to live forever. Totally understand that. But medical debt is one of the biggest killers. And we see that with a lot of youngs. I get the student loans. That's another big one as well. But with student loans, we can make that choice of like having to do something about our school and where we go. With medical, if you get sick and you don't have the right coverage, you could have heart attack, cancer, any of those kind of things. You're looking at bills that are $40,000, $50,000, and that doesn't even include hospital or any of the other things that may be involved.
And so I would say that there are people I've spoken to out there who would turn around and say, what is a financial coach doing talking to me about insurance? Well, money touches everything. Right? I've got a plan in place. You're not an insurance agent. You didn't take your Series 65 or whatever the heck it is for insurance. And so why are you talking to me about life insurance? Why are you asking one of my questions in my budget creation session when we're going through it? Okay. We have a car. Yes. We got auto insurance. Yes. Who are we using? Well, why do you care? Well, because if I can basically at this point, I know where you're living, what state you're in, what area you're in. You just told me how many cars you have. Seems a little high to me.
Yeah.
But are we over covered, or are we just spending too much money on coverage that's not covering us? So even though we're talking about car insurance now, that all rolls back into your budget on a monthly basis.
Yep.
And to your point, if we're talking about health insurance, or if we're talking about somebody gets in a car accident and we have not enough coverage or the wrong coverage, now instead of it just being a monthly budget issue, it has now turned into a long-term possible debt issue.
Right. And we don't realize that. And great point. Insurance is part of that. You talk about auto and, homeowners to life insurance. We get to a point in our journey itself that we're protecting our money. And you don't realize that, yes, an emergency fund will be great in place. Let's say you have 3 to 6 months, whatever the number is, that's going to cover a lot of expenses. But for instance, medical, even car, if you get into a severe car accident itself, it's not just coverage for you. What if the person that hits you or you hit itself is uninsured? That then becomes, that becomes tenfold. So you don't realize, and of course, I signed up for car insurance 10 years ago, and it's the same, right? We're good, it's the same situation. You don't realize that. Go back and see if there's a cost deduction, if there's a discount, if there's so. This is, as a coach itself, we're here to ask those questions that we are, because our clients are such in these states of sometimes stress where it's like, well, why do I have to worry about it? I said, well, there's an opportunity not only to maybe get you some savings, but maybe get you the right coverage so that the next event that happens from an auto perspective doesn't become another added stressor to your life.
Yeah, exactly. All right, George, we could go on all day long, but I have one question for you, because I created this show to help other people realize we've all made financial mistakes, but we can get to the other side of those. So, George, what is the dumbest thing you've ever done with money?
So let me get the list out. Hold on. It's like so for me, the biggest thing that I had a home in Pennsylvania. So I moved from New York to Pennsylvania for about 15 years in Pennsylvania. Owned a house itself, raised my kids, my beautiful 2 girls in Pennsylvania. Dumbest thing that I've done is I took out a 401k loan thinking this was a great idea because I wanted to redo the steps to my house. I was like, I think we need to redo it. It's time, blah, blah, blah. Okay, great. Justified it, did okay. All right, fine. The work was beautiful. They did an amazing job itself. Thank you to the construction crew who did all that. It was $7,500. It wasn't even that expensive. It was, quote unquote, for a home renovation. It's like, that's not too bad, because I've heard of $50,000, $60,000 renovations. So they did a fantastic job, and ended up, I sold the house, left the home itself to move to Tampa, new opportunities, greener pastures, whatever you want to call those kind of things. But I ended up still having to pay for a loan that I didn't even own the steps that it was
Oh,
attached to. So,
oh,
and I'm thinking, I'm going to die in this house. I'm going to be here forever. Not realizing that once again, life, God, everybody challenges you. The universe will challenge you to kind of, that thought process.
yeah.
And yes, whoopsies so I had to, I went through my Ramsey plan that 3 or 4 years ago, to really say enough is enough. And that was one of those bills where it's like, okay, dummy, don't do that. That's not a good idea. Let's not do that in the future as well.
Yeah.
So yeah, I've done that.
So the argument to that is, especially with 401k loans, is, well, George, what's the big deal? You're paying yourself back.
Exactly. I'm getting my interest in 2% back and all of the justification. And oh, by the way, I'm going to be at this company forever. And I'm never going to worry about having to, do a disbursement if I leave the company. Oh, by the way, I left that organization for another at that point too. So it's
Yeah.
okay.
So typically the loan comes due in full within 60, 90, 120 days, something like that.
So
What did you guys end up doing?
60 days. Yep,
Yeah.
it's about 60 days when it comes to the loan needing to be paid off. Now, of course, if you're like, well, if I keep the account open and pay the loan, yes, you can do those things, but of course then your money is not doing anything in that period of time because it's just sitting in technically a very glorified money market account that probably won't make more than 0.002 in interest anyway. So yeah, don't do that.
So really it wasn't, I've been doing this show for a while now. We've heard worse, but what it really did was it turned off your saving for retirement capability for a period of time. And what we would have to look at is we'd have to know the number of days and how much money you could have been putting in there, how much interest you could have made during that time. And so really it's a great example of a lost opportunity cost.
Well, I mean, to be honest with you, it was for me, it was the I had it moment as well. It was where like I'm making good money. And all of a sudden I just keep creating these debts itself because I'm like, oh, okay, like I'll pay for it later. I'll get to it later. We'll eventually get to, and it's just later always catches up with us. And think about the folks who probably took loans out or credit card kind of purchases a year ago. The interest rates are now astronomical, and they were bad last year, but now they're in the 25s and 28% itself for each of the, for some of our credit cards, and store brands are in the 30s. So this is where it's like, okay, like we need to change our habits and our mindset to say, I need to be better in the sense of stop thinking about I'll manage those things tomorrow and seeing, do I really need those things now? Is this something that I really have to go into and invest in, or whatever we would justify in our head to purchase?
What was the conversation with your wife after you had this aha moment?
She reluctant, because it's like, who's Dave and why do I care? There was a lot of that kind of thing. But I think she realized that our relationship was strained. There was concerns and issues in regards to how we talked about money. There were feelings about some of the things of like her not being involved in big decisions in some of our money as well. And that was something like kind of gave us part of our aha moment too, was to kind of like, okay, like I want to improve our relationship. I want to improve the way we talk about money with each other. And I'm realizing at that time, my kids, 5 years younger as well, they're starting to see like, is that how we deal with money as well? And I'm like, yeah, no, there's a better way. Let's try to improve our situation in order to be able to improve our relationship and the things that we do together when it comes to our money as well.
So did we have any other mistakes we needed to clean up during this time?
Of course, is debts and credit cards and car loans and all of that kind of stuff. So by the time I finished, the majority of my journey itself, I mean, you're talking 120K in loans and all of that. And of course, we just don't want to I was in denial, and I'm in my 40s itself, and I was like, retirement. We're never going to retire. And then you realize, like, wait a second, I don't want to work till I die. That's not a
Right.
good plan either. So it was kind of like, let's use the energy that I have now, get the buy-in from the family. We all can contribute to our journey itself, and look
Yeah.
for ways to be able to get out of that debt. It wasn't easy. You're talking, 2.5 years
Yeah.
of really working through that. And that really helped shape me to kind of like, okay, well, I know the feelings, and I know how the process would work. And that kind of dawned on me like, hey, as a financial coach, as a coach, I can help people not just work through the numbers, but really work through the habits and behaviors that are going to really motivate them to achieve the goals that they have. So I think
Absolutely.
that's where I would want to be from that perspective.
Yeah, our friend Karen is with us. Hi, Karen. She said, even as financial coaches, we've all had levels of stupid. Amen.
Amen with that. Yeah.
Learn from our mistakes without the pain. Yes, that's to everyone watching. Learn from our mistakes, please. We all have a list of money mistakes.
But here's the thing: there's gonna be pain, regardless itself. You have young clients that's coming out of college, right? And we want to try to avoid these types of mistakes as we get young, but it's one of those kind of things that sometimes we want to learn from our mistakes, right? We get it. We can only be of examples for folks, but when you're inundated all over socials and society and family, and it's like, you have to spend money to make money. And it's like, yeah, but there's a better way. There's certain things you need to do to actually make that work.
Yes, definitely. So if we could go back in time, George, what would we do differently about the steps?
So tell my young self, like, calm down. There's no need. I grew up in a single mom household, so we didn't have a lot. We had enough to get by. So when I grew up, it was, I need to catch up on all the things I didn't have when I was younger. And for me, I would tell my younger self, first of all, it's okay. You don't need all this stuff. It's not going to make you happy. But at the same time, pay yourself first. So for me, it's save and invest as early as I can, and start small. We always think like, oh, I have to set aside $1,000 a month to save. No, if I did $5 a month to $100 a month to $100 a week, whatever it might be, start small and automate. Well,
Yes.
back then, maybe automation wasn't so easy, but definitely I would tell my younger self, like, the first thing you do is put it into the envelope, save the money, put it aside, and it's money that you're not going to touch. So those are the little things that I would definitely do a lot different. And of course, in college, don't sign up for that credit card. You don't need that credit card. It's okay.
Everyone has their college credit card story. One of these days, I'm going to have somebody ask me about my high school credit card story. That's a whole other discussion.
It was bad with college. Are you kidding? High school? No. You don't need that free T-shirt. Trust me. You don't need it.
I remember walking past those tables and saying, I already have a credit card. It's okay. It was not okay. George, what do you think the girls got out of it? When you and your wife had that aha moment and started communicating, what do you think the girls got out of it?
They were like, what? Are we still going to eat out? Are we still going on vacation? I said, well, probably much less for a little bit of time. For me, I showed them the dedication of hard work. Obviously, having money and doing it's going to it takes effort. And the one thing that I did tell my kids itself too was I really worked hard, but I lost time with them, and they were older. These are not young kids. These were, kids were in high school, or at least in grammar school at that point. And I was like, Dad's working hard so that you guys have a better future when it comes to getting ready for college or having the opportunities, so that we don't have to worry about, oh, you can't do something because we don't have the budget or the finances for it. And sometimes we have to say no. Trust me, I was very good at saying no in the past, but I felt guilty and I felt bad. And I think a lot of it was more of, well, because of the debt, because of what I was entailing and was following me, it was preventing me from actually going on vacations with my kids or doing things just to do them, and not having a budget, giving me the freedom to do certain things. So I think a lot of that really helped shape better communication with us. And of course, when my daughter was getting ready for college, hey, how are we going to pay for it? Do we need to go 80,000 in debt per year to get an education that there's no guarantee, that you're going to get a job that's going to be able to pay that back on a monthly basis. So it definitely allowed us to have better conversations and really expand on those conversations. So I was very, whether they're listening, again, kids are kids. And I remember I was always listening to my mom. Sorry, Mom.
Right. Exactly. But being of that age, I'm sure they got some sort of message out of it. So,
well, I get asked, right? You get asked. So are you using the debit card, Dad? Are it's a cash only.
Oh my gosh, that's amazing.
I get a lot of that. I'm like, okay, I know that's sarcasm, but thank you. Yes, I'm using my debit card.
That is amazing. Oh, I love it. Built-in accountability partners, and then you kick them out at 18.
Exactly. I say you get up to 21. That's it. That's all you get.
All right.
21.
George, thank you so much for being with us today and for sharing your mistakes. Everybody who jumped in late, I saw a lot of people on the Facebook channel. You can catch the replay on YouTube in a few hours. And I appreciate everybody joining us for another episode of Lessons Learned, the dumbest thing I've ever done with money. Thanks so much, George.
Thank you.